We have Pankaj Tibrewal, who's Senior VP and Fund Manager, Equity at Kotak Mutual Fund, joining in with his view on the markets and also, how he's approaching the volatile times that we're seeing with the broader indices and also the kind of underperformance that the large caps have staged thus far. Pankaj, it's great to have you on the show. Thanks very much for taking out the time. Let's start off with your overall market view first. Especially given that 2018 has come on the back of a very rewarding 2017.
Good morning. I think in the near term, as we have been saying, markets will remain volatile. The upside in the near term looks capped as macro challenges continue to be there. Oil commodity prices are inching up. Fear of inflation locally as well as globally is back. Interest rates across the board have gone up. Again, the fear of twin deficit, which is current account and fiscal, has come back very strongly. Global central banks are reducing liquidity in 2018, which is creating some kind of a currency scare in many emerging markets. And also in India, we saw from January till May, equity and bond outflows, which were higher in the same period even in 2008. So clearly you have macro challenges, but the good news is that earnings have started to pick up. Fourth quarter earnings have just ended, and when you combine the entire things in BSE 500 companies, X of financials, the profit grew about almost 13-14%. Obviously this quarter was very unique in a sense that you had about almost $21 billion of NPA addition in this quarter post the Feb 12 circular. In the whole of FY18, the banking sector added 50 billion of gross NPAs, and the provisioning which the Indian banks took, both PSU plus private, was $23 billion. So the headline numbers look subdued even on Sensex and Nifty, but if you remove some of the corporate facing banks and the PSU banks, the broader market earnings growth was in mid-teens, which is a healthy number. So across the board, whenever we are meeting companies, different sectors and in conferences over the last few days, the sense we are getting is that the bottom of the or the ground reality is that things have started to pick up. Many of the companies and sectors are complaining of supply shortage, and hence you are seeing demand momentum being very, very strong. So that's a good news. So, but we need to weather this macro challenge for some time, which will cap the near-term market upside.
Pankaj, morning. Apologies firstly to keep you waiting. We were having an auto discussion which went a little over. But we were just chatting with S. Narain as well from ICICI Pru AMC.
No problem.
And he was of the view that it's going to be a very volatile year that you're going to see ahead. For people investing via the SIP route, this is perhaps the time to go out there and deploy money into small and mid-cap equity schemes, because that money is, what you're looking at from a longer time frame of about 5 to 10 years. But he said that large caps have just come to the fore. After underperformance of last 3 years, they're just about beginning to have their time in the day. And outperformance is going to remain with the large caps. Is that your view as well?
So if you look at this calendar year, there has been a sharp underperformance of mid and small caps vis-a-vis large caps. And after almost 20-30% of correction in mid and small caps, large caps are not looking as attractive as it was, say, almost 6 months back when in 2017 the mid and small cap party was going on. So it's not as attractive. However said, this year is going to be volatile. I think people will find shelter in companies which are more, I think, stronger in terms of cash flow, balance sheet, and that may be in the large cap space. But however, if you take a 2 to 5 year view, our thought is that in this carnage we should be open at looking at companies which are available at a throwaway price or a decent price, and the outlook on the earnings remains to be extremely strong. Our view is that over the next 5 to 7 years, India will add another India. That means your $2.5 trillion GDP moves to $4.5–5 trillion, and there would be many companies which would expand their profit at the CAGR of 25-30%, and hence we need to look out for those companies to give good returns to our unit holders and investors. So I think we can segregate between large caps and mid caps, but the companies which will deliver earnings growth will create wealth over the next 5-year period, and we are on lookout for those companies where management are strong, cash flow is very good, they have a strong earning visibility, they are gaining market share from unorganized industry, and we believe that if that's the disciplined approach, you will find wealth creators in your portfolio.
You know, Pankaj, we have an important conference later today, a press conference actually, and you know, there is an important meeting lined up between the PSU bankers as well as the Finance Minister, Mr. Piyush Goyal, on the consolidation path ahead for PSBs. How do you view that? Do you think that sooner rather than later there would be a value opportunity in PSUs, which has been screaming out loud for what, I don't know how long, maybe 5-6 years? Not come through. Do you think that now, because the sound bites we gather indicate that this time around recognition is done, a lot of it, at least 90% to some extent, you know, some analysts say that to the extent of 90%, you know, provisioning will happen over the next couple of quarters. So are we likely to see the end of things?
It's tough to say whether we are coming to an end, but clearly if you look at the numbers in the fourth quarter, PSU banks reported about 63,000 crores of losses, and that was basically led by higher addition to gross NPAs, and you have to provide for those NPAs. Obviously we are coming to some kind of a near-term resolution, but whether it be 2 quarters, 3 quarters, it's difficult to say. Our focus on the portfolio has been over the last few years to back up the retail oriented private sector financials. We believe that if you look at last year, 99% of incremental credit came through retail, and a lot of retail oriented private sector banks have done a phenomenal job. I think barring few PSUs on the upper end, will be very crazy in investing in the lower end of PSU banks, and we believe there are enormous risk out there still, and if you look at out of the 23 PSU banks, 24, 11 are under PCA, and clearly you are seeing 50% of the PSU bank being freezed. So there are a lot of risk, and we would in our portfolio look at more towards insurance, more towards private sector oriented banks, maybe at some point of time corporate oriented private sector banks, but not towards the lower end of PSU banks at all. Our money will be there even in PSU on the top 2 or 3 names, that's it.
Pankaj, are you sensing any sort of redemption pressure though when it comes to, you know, restricted mutual fund schemes that's within the large, or rather within the mid and the small cap category?
Flows have moderated a bit compared to what we saw 3-4 months back, but still in an absolute number it's still very healthy. We are not seeing redemption pressures. The decline has been used by investors to buy into, and this time one thing which is very appreciable is that investors have showed maturity, and they know that this volatility is not to get worried about. They are taking a more medium to longish term view, and hence we are not seeing redemption pressures. In fact, the flows have been healthy, though they have moderated a bit compared to what it was say 3-4 months back.
All right, Pankaj, we'll let you go at that. Thanks very much for taking out the time to speak with us this morning and share with us your thoughts on approaching the markets at these levels. Also your view on what's happening with the mid-cap universe.